The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on? Well, we're up almost 16 points on the S&P cash, 2679. Dow's up 164 at 24,426. Nasdaq's up 72 at Well, I guess we're back on. Hopefully we're back on and everybody can hear me. I don't know if I'm back on in the den yet. We want to check that. Anyway, I was saying, we're kind of light on volume on Friday. Today we've got 3.4 billion shares. So again, kind of light. But again, we're just looking for this market to start heading up into the three-day weekend, ending on the 28th of this month on lighter volume. Maybe we see a little weakness before then, but my theories have been that we were going to push all the way back on and in to that, probably that three-day weekend. So we'll see. I mean, the most bearish signal you could have is very light volume in that week. 3-4 days leading into that three-day weekend. It's where a lot of markets tend to shift. Of course, huge shorting positions, massive bearish sentiment last week, and you never really got a lot of volume on the way down. You're not really getting that much volume on the way up. But still having this kind of very manic depressive view of the world, and it's just a little bit more manic today. Oh, I got to find that song. In fact, we got, hopefully the engineer's listening and we can get, I think it's, isn't it the Bangles? Another magic, or another manic Monday. Oh, well, it certainly is a manic Monday. at least in the markets, up 15. Yeah, man, that's what it is. Bengals, yeah. So anyway, we've got a market. It's kind of going up on light volume. I'm thinking, I thought that the market was fairly short, but it looks to me, are we hearing it? Yeah, we're going to have to listen to a little bit of this. I think it's before it gets into the... Yep, it is just another manic Monday. You got to wait through the whole front section of this song, though, to get to it. We'll just listen to it in the background a little bit. Anyway, maybe they'll find that spot when we come back from the next break. Anyway, we're a little less than 3.5 billion shares in here. But what I was saying was that maybe we were a lot shorter than even I thought, and I thought we were pretty much to the gills short. We're looking, at least the action today suggests we're to the gills short and a little bit more, and running those folks out today. Maybe they shorted on Friday's close. Hard to tell. I didn't see that much. But I'm seeing some action that says that the market's kind of peaking. Now, Wednesday is options expiration, the start of it. Actually, when all the market makers go delta neutral on options. It's a way of making sure that whatever they have left out there doesn't blow up in their face. We're going to have a webinar about trading options and how options tend to be a lot cheaper during this segment going forward, and why they are. We'll talk about how to set these up, how to look for the short positions in both the bi-monthly short and the daily shorting numbers. We'll show you, and I'm putting together a whole bunch of stuff. In fact, I was working on a lot of numbers over the weekend just to show you how you can actually go back and test your theories and hypotheses. But you know what? I'm looking again at numbers in options and everything, and I think we went to a very pessimistic view of the world, and now kind of a very manic view, at least from the underlying conditions. Part of that may be from Apple. When we were looking at it earlier in the day, it was up about, where is it at here? It's 186 now. Got to 187.67. That, I think, had a lot of people shorting it after earnings, thinking that this thing was going to top out fairly quickly, and just making it harder and harder. Anyway, when we come back, we'll do a little bit of history. Maybe we'll hear a little bit of "It's a Manic Monday." We don't know, but we can hope. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, Scott and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Just another manic Monday. Wish it was Sunday. That's my fun day. I don't have to run day.
And yeah, it's just another manic Monday. Well, it certainly is. We're going from depressive to manic to manic to depressive to depressive. And another great song about that is I've Seen Fire and I've Seen Rain. Yeah, it seems like there's no happy middle. The market's either incredibly bearish or incredibly bullish. Today we're incredibly bullish. But we need to get started with a little bit of history, and then we'll get into some charts, talk about what's going on in the news.
Then it's all just a little bit of history repeating.
It is history repeating, and on this day in 1994, a ceremony presided over the Queen of England, Queen Elizabeth II, French President Francois Mitterrand. A rail tunnel under the English Channel was officially opening, connecting Britain and the European mainland for the first time since the Ice Age. World's longest undersea tunnel, the channel runs under the water for 23 miles at an average depth of 150 feet below the seabed. Each day, about 30,000 people, 6,000 cars, and 3,500 trucks journey through the channel on a passenger shuttle and freight trains. Interestingly enough, who do you think was the first person to actually want to build the channel? Bueller. Well, he was a general in France. Some people might remember who I'm talking about. But yeah, back in the about 1801 and 1803, I think it was the Grand General Engineer for the Army was asked to see what it would take to build a tunnel underneath between France and England. Of course, there was no way for them to do it, and we owe a lot of the tunnel boring equipment we see today to doing this, because this is a good way to figure out what's going on. I've gone through it twice. I got to tell you, not a great feeling. You always kind of feel like, well, if anything goes, you know you're dead, because there isn't a lot of backup. No scuba equipment or anything like that. But I have to say that it was nice, but I don't know. I'm just feeling that maybe if it all caved in there, they'd just leave me. At least if I was in an airplane and it crashed, they'd find my bones somewhere and throw them in a ditch or something. But I don't know. I'd always figure that I could be down there 50 years before anybody decided to come along and fix it. But you never know. Too, just what happens if anybody tries to blow something up down there? That's always a problem, and that's what really makes me wonder about Musk's idea of boring all these tunnels everywhere. It's incredibly expensive, but who knows? Anyway, we've got news. Well, the question is, how long did it take to travel through? I went to Paris, and it was, I think, 2.5 hours, but I think it was like 30 minutes through the tunnel from the time I got on till the time we got back out. But De Gaulle. No, De Gaulle's about 140 years after. A small diminutive general of France who happened to put his hand in his shirt a lot. All the people used to do that. You see those pictures. They all put their hands in there. No one said it in the den yet, but they all knew who I'm talking about. What's going on? Well, over the weekend, we had yes, somebody's finally said it, Napoleon. We saw some news and the earnings report from Berkshire Hathaway. They lost money. You would never know it. They lost money. Basically, they can't do the books the way that they want to do them anymore. And kind of interesting that they were doing them that way to begin with, because when the bunch at Buffett's brigades in Omaha go after a company, they have to have the books in a form like they're having to do it now. Anyway, it helped fuel a $1.14 billion loss at Buffett's Berkshire Hathaway for the first quarter, I think in 10 years. Yeah, something like that. But I thought it was rather interesting that they lost money, but you would never tell from the sycophantic, I'm going to say that's what it is, CNBC's. When it comes to Berkshire Hathaway, he's good press. It's easy to do a couple hours with him. No heavy lifting. No sending people out to the deepest, darkest parts of Alabama or somewhere in a swampy place where the reporter or reporterette may be stung by a mosquito. But sycophantic nonetheless. No real hard questions. I would ask that. So what gives, Mr. Buffett? You lost money. Isn't that your first rule? But what else can I say? Anyway, spent a lot of time talking up Apple over the weekend. But the first net loss since 2009. Google's got some splaining to do. Buried in a lot of stuff. I wanted to talk about this Friday and missed it. You just can't get everything in on a Friday afternoon sometimes. But reports from digital marketing firm Merkle show that Amazon's shopping campaign slowed after the end of Q1, stopped abruptly on April 28th. These are the ones that Amazon and Google put together, and they basically allow each other to use each other's data to go after you as a customer. Well, Amazon's kind of worried about what Google's doing with its data after the fallout from Facebook, and these Amazon shopping campaigns have ended. Now, most likely this is going to massively affect Google while probably not doing much to Amazon. So as we're going forward here, I want to watch Google over the next week and start seeing whether, and even the last 10 days, even before this happened, because this is kind of slowly leaked out, and we've found out more about it. But the biggest amount of money shoving around in Silicon Valley is between Google and Amazon. They are two sides of the same coin. Ripple and Thunderbird are getting sued. And I think we saw some of that with the price action. It was hit by a lawsuit alleging that it led a scheme to raise hundreds of millions of dollars through unregistered sales of its XRP tokens. And the FCC's pretty much come down with the ruling that, yes, all these things are basically unregistered sales, and there is a real chance that these XRP token kind of things, or just these token IPOs, could have to give all their money back, but going after Ripple first. And it was the hardest hit earlier in the morning. We'll be back. We'll start looking at some charts. You can give me a call at 877-927-6648. I already have some emails coming in. You can certainly email me at path@tfnn.com. Give me a call at 877-927-6648.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And what do we have out here? Oh, did I delete it? No, I did not. Thank God. David from Panama City, Florida. In your opinion, any reason why Netflix will not try to hit the most recent high of 338.82 this week? Yeah, I mean, this week, I'm going to say that certainly by the 18th, by options expiration, but yeah, I could see this thing going sideways and maybe taking a little while to get up to 338. Maybe not this week, but by next week. One of the things I dislike is the energy so far off this leg on the spike down on April 25th. Hasn't had a lot of energy back up. I would just say that because this is one of the more hated stocks, it's probably short and you're going to get back up to that 338.82. I just don't know if it's this week or next week. So I would give you a little bit more time on that one. Could it certainly spike the $10? It could. And just the light volume today makes me think this thing's going to go sideways. You know, we've got Delta rollover, or Delta Delta neutral on Wednesday. And we could see all these stocks kind of pull back a little bit and then set back up for the run into that 18th for options expiration. But you know what? I think we're probably, you know, it's just that there isn't that much. Once we get to 2,700, there just doesn't look like there's that much above it. So I'm not going to get really wild and thinking about it. Okay, got that one. Question about Microsoft. Microsoft today is having their big deal. It's called Build. I think it's in San Francisco. You can watch everything online, so I don't have to go to these anymore. In fact, I was programming all weekend long, a variety of things, testing some stuff out, and we'll see that in my webinar the 16th. But, you know, this is up here again. We'll see what the end of the day is, but if you don't have 22 million shares by the end of the day on Microsoft, you could see this thing. Yes, I still think this one is going to 100. And you know what? This thing ringing 100, 101 may be the trigger for setting a high for the summer in a handful of these SMHs. As I've said for, I don't know, 6 weeks or maybe 2 months, I think we're kind of trapped in this medium range, maybe 2,600, maybe 2775 or something like that. I just kind of think that we need a while to digest all the things going on, from the tax implications to the rest. And I think we're just in a big consolidation phase. I think I talked about it Friday. I put 2 questions about a commodity going either higher or lower. I said, but that ignores one other thing, and that is that commodities do have the ability to go sideways. And historically, they have. So have stock markets. And I think that there is the opportunity to see a market go sideways, maybe through most of the summer. I think that by that time, we certainly could see higher prices in the fall. But I think we've got to get through a little bit of these rate hikes and see that henny penny isn't falling, and the sky is still there, like today. And again, I think we'll have a lot of depressive and a lot of manic days between the falls, where I think maybe that'll be enough consolidation. Now, could I be proved wrong tomorrow on that whole theory? The answer is yes. I'm not predicting it. I'm just saying that I think that it would be likely to see kind of big, this big, maybe 150, 170 point trading range in the S&P set up. And I think that would be kind of the way you're thinking about it. Okay. What else do we have? Got some other people. Okay. So that's Microsoft. We talked about Netflix. Question about Tesla out here. Again, Tesla just massively short. The question you want to ask yourself, do you feel lucky? Do you feel lucky, punk? And that is, you know, when these stocks are, well, I'm going to just tell you how much short interest each day. Now, these numbers right here aren't people that go home short, but how many percentage of the shares that were traded these last few days were initiated by short order. And if we go to the 30th, that had a 23% short day, 23% the next day, 20%, 25% the next day. On Friday, we were 26% short on Tesla. And guess what? It pops up again. As I've said before, if you look at the numbers over any kind of period of time, you will find that it's not uncommon. And I think we actually got new short numbers today. I haven't downloaded them, but I think we're probably getting new short numbers today. I'll look at them tonight. That's going to tell us a great deal more, because those are the bi-monthly short numbers. Now, those tell us what happened 2 weeks ago, so you're always looking in the rearview mirror. So I like to put those together with the daily shorting numbers that don't tell us how many people actually went home short, and try to do, if you've ever flown a dead reckoning version of navigation and trying to figure out how short we actually are. In fact, I'll be able to check that during the break. So what do we have out here today? It certainly is a move up, and it doesn't have more volume, but it doesn't have to. If everybody's short, these things don't go down very far before people start covering, and they run everything up back higher. The question, I guess, is how high this could thing. I still think that you could see Tesla back up around 340. And if we got up there and the volume was incredibly light, as it probably will be, and people quit shorting, that may be the one where this thing falls 100 or 200 bucks over the next year. But it is fairly close. Everybody kind of knows. This isn't a lot different than the dot-com bubble, when everybody knew they were trading stocks that had zero earnings, zero business plans, and were nothing more than, as our friend Andy Heck calls them, trading sardines. But there's not much. But I like that gap. There's a gap at 320 and then at 340. And that one at 340 really looks like that could be some a monstrous place where everybody and their dog decides it's time to throw in the towel. Now, is it going to get there? I don't know, but that's what it would take for me to pull the trigger again, is it to get back up there on light volume. Anyway, you can certainly give me a call at 877-927-6648. Please email me at path@tfnn.com, and I'll even take questions from the den now. Yes, you in the den. I see you. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yeah, the bi-monthly short data is not out yet, so not today. So maybe tonight or tomorrow. It's right in there. I'll have to look at the schedule. But we'll find out more about what people have been doing in the last 2 weeks. Again, that's always 2 weeks old, so you're always looking in the rearview mirror with that. You want to compare that with the FINRA short interest. We'll talk about how you find those files and put them together if you want to. I do every day. And the charts I actually put in my newsletter will show that daily short interest in the stock. In fact, you're seeing it right now if you're looking on Tiger TV or in the den. These little black parts on the end of the bars for the volume actually show the shorting for that day. Again, doesn't mean people went home, but does mean that orders were originated as shorts for that percentage of them. So you can see a lot of times, every time everybody gets real short and starts shorting the living daylights, almost always a bottom in the marketplace. And one of the things that goes into my kind of, what would you call it, my style of trading. And of course, you got things where everybody's euphoric, and that's when the market also tends to fall out of bed because no one is short to cover on the way down. And when you get these kind of violent reactions, it tends to be feast or famine. When there's no shorts, guess what? Quick rides down. Okay, professional cynic. No, I'm going to say skeptic. I'm a skeptical. I'm cynical would be that I'm just mad at the world. Skeptical means that I assume that 95% of the people in the world are probably don't know what they're talking about, but they're not evil. Cynical would mean that I think that they're all evil. And why a great percentage of them are probably evil, not all of them are evil. So that's it. Just mad at the 98%. That's probably close. Okay, so let's look at some charts out here. And hopefully we get, what did I do? Oh, did I close that? I did close that, which is no good. Need to get that back open. Okay, let's look at a few stocks out here that are trying to make some kind of bottom. I would have liked the volume or energy off this March 21st high in Alexis Technologies, ACLS, to come back with less energy. It did come down with more than it went up from that February 9th low. What it didn't do was have any volume at this low. Previous low at 2190 on February 9th had 800,000 shares. You got into that with 300,000 shares. We're back into the trading range, but not a big bounce. Again, what you're looking for is that energy coming off the last high and testing the previous low to have less energy in it. It's about the same, but does mean that if you are short, that you think that it's about time to pick up. Now, other companies that have been making lows, and we've talked about this on Friday, answering, I think, John from Philadelphia's question about the XLF. I just didn't see that much in the XLF. We'll look at it today. But the reason why is the inverted yield curves. I still haven't heard any good reason on why that's changing. Energy on the way up on Bank of America, same on the way down. What we didn't have is the volume coming back here, testing the February 9th low that had 155 million shares. You did it with a spike on May 3rd with 110 million shares. Friday, you kind of came into this thing with 58 million shares. Today, you're popping up on 34 million shares. So again, do these things have they made a bottom? Yes, but they're going to have to take some consolidation before going forward very far. I don't see the kind of, I mean, what we had in the SMHs was a light volume down, and that's why you got the rather violent pop back up in those, and along with people being short. It's much harder to come out here and finding these out here that had energy on the way down. Now, the XLF did have enough energy off this April 13th high back down to this May 3rd to get a little interesting. You basically got into the April 2nd low at 26.55 with 74 million shares with 69 million shares. My guess, though, is you had less volume. You're going to get this pop. You're probably going to get one more pull back down in this XLF. And if you get like 2 or 3 days or 4 days down with very light volume, then maybe that's it. And you get back in here with this thing with maybe 50 million shares or 45 million shares, then I think maybe the XLF has made some kind of low. So we'll look at that. Maybe you'll get a significant enough bounce. But $26 to $28 isn't gonna. Nobody's gonna retire on that. So I'm just, your previous high is not that big, which is problematic in it. At least if you wanted to make a play, I'd have to make a play for the mid-26s to this almost $30 level back on March 12th. And I don't think you've got that kind of work done in the stock to bounce up that high. To other stocks, Bemis, another one making some lighter volume lows, but not light enough. But a lot of these stocks have, even if it's just been 10%, have kind of come into these recent lows on lighter volume. Celgene Corporation, still not seeing, we'll look at the IBB right after this. But you know what? You've got a fairly decent spike low on February 9th that had 11 million shares. You went lower than that at 84.25 on Celgene on April 3rd, 8.5 million shares. Just got into it with 6.5 million shares so far today, but even a few days ago, 6.5 million shares. So the volume is kind of decreasing, but you did have a little bit more energy off the top back here to these lows. So again, let's take a quick look at the IBB. It should have been able to do a lot better than it has over the last few days. The bounce, they just continue to be a little less energy. And again, you went up on my power law vector indicator off that low of April 6th up to the high of April 18th on a 3. You came back on a 2.7. I would have liked to seen a bounce at 3 and maybe a pullback on like 2.1. I'd like to see a significant degradation in this. Now, even on the lows out here, you've got some kind of low, because that February 9th low came in at 101.02 with 8 million shares, and you're just into it with a couple of days ago with 2.5 million shares. So can you go higher? The answer is yes, but I'd still think maybe you get one more small bounce and then some pullback, and maybe a couple of days around that 101 area with just like 1 million or 1.5 million shares. Just tell you that no one's interested in selling in the biotechs, and maybe you find it. I think this will be, if you can catch it, I think by the end of the year, this will probably dwarf the returns in the SMHs. The problem is just when is this thing going to turn? And there's no good signals just yet. Well, we're going to go to break. You've got just a little time left. Email me at path@tfnn.com or give me a call. East of the Rockies, 877-927-6648. West of the Rockies, 877-927-6648.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market and covers a gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we've got just a little time left. We'll go through out here. Now, here's one that looks kind of what I'm always looking for, and that is a drastic change in volume at the lows and a fairly drastic change on the amount of energy going up to what is actually coming back. The February 9th low in DEPO, which is Depot Med, 601, 1.74 million shares. You come back in and get into that with about a million shares, a little less than a million shares on Friday, and 1.2 million shares the day before. Compared to that 1.7 million shares by Power Law Vector Indicator, 4.3 on the way up, 2.88 on the way back. And, of course, you got a little bounce out here today. But this is the kind of pattern I really like. You even had more energy on those leg down from December 18th of last year to that February 9th low, a bounce with more energy, and then the energy really coming off. It could have come off a little bit more, but you probably have a fairly decent setup for a trade here. The question is, if it had a little less energy, I'd probably be long this one already. It may just need a handful more days of consolidation around this $6 level, but certainly you got a buy signal with a close above 601, which I guess you're going to have today. So a lot of stocks getting back into this part. I'm just kind of worried that there's not a lot of upside in the indexes, and that may be problematic for trading stocks, especially ones that aren't on the ticker CNBC all day long. I think we're going to get a lot of those. But that's about it. Going to be kind of quiet. I'll probably not be doing a lot of adding positions until we see what happens on Wednesday when everybody goes delta neutral. And but I think we're going to have a big hot week from Wednesday into options expiration on the 18th. Catch my webinar on the 16th by being a subscriber. As always, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.